Hello there and welcome back to Dukascopy TV. I'm Monica Gibson. Laurent Barbé joins me in the studio right now from BCGe. Laurent, welcome to the studio.
Hi Monica, thank you for inviting me today.
It's a pleasure to see you. Now we're going to be talking about the cantonal banks in Geneva and also in the Swiss economy. Now the specialist subject of BCGe, obviously.
Indeed.
Now, what is the importance of cantonal banks for the Swiss economy, to your mind?
Well, there are 24 cantonal banks in Switzerland. Among those 24 banks, all those represent 30% of the total business banking activity, with a total combined balance sheet of 524 billion Swiss francs. Among those 24 banks, 13 are listed on the Swiss Stock Exchange, including 10 that enjoy an unlimited guarantee from the cantons, and 10 that enjoy a long-term credit rating of AA or better.
Okay, now obviously investors, it's obvious they're looking for yield. So how can they achieve this through this segment?
Absolutely right. Yield is the key thing for the last few years with the low interest rate environment. So the yield can come from this investment through, on one end, the capital growth, on the other end, the income side. So let's start about the potential capital gain, as we can see on this chart. So if an investor had invested in 2002 1,000 Swiss francs in a basket composed of the listed cantonal banks, as of today, his investment would be worth 2,150 Swiss francs. If you compare this to the Swiss Performance Index, which is a good reflection of the Swiss equity market, your investment would be worth 1,400 Swiss francs only. So that shows that this segment of the industry has really some interest in terms of capital growth.
Okay, now obviously growth capital is king, but what about the risk, the volatility within this segment as well?
Very good question indeed. If you look at this chart again, we can see that over this period of time, the volatility, well, you cannot see the figures, but you can see the chart. But I can tell you that the volatility to achieve this performance for the cantonal banks was only 7.5%, when the SPI volatility during the same period was 14%. So something more to illustrate this is during the 2007 and 2009 financial crisis, the cantonal banks were quite resistant because they only lost 17%, whilst the SPI lost 50%. I must point out that over the last 2 years, as this graph outlined, the cantonal banks have underperformed the SPI, so over the last 2 years by about 35%. So this, in our view, offers a good opportunity to enter this segment and eventually to catch up with the market.
And what about in terms, Laurent, of income? Where does the cantonal in this sector really kind of provide in that?
Yeah, the income is indeed quite attractive in this segment as well. Generally speaking, cantonal banks have been paying higher dividends in general than the SPI companies again. So if you look again at this investment of 1,000 Swiss francs that we have made in 2002, your cumulative dividend from the cantonal banks would amount today to 800 Swiss francs. If you compare this with the SPI, the same amount of dividend received would be 380 Swiss francs. So again, you can see from a yield point of view, an income point of view, that this segment of the market is quite good.
Okay. Now it sounds as though it's providing quite a lot. Why are cantonal banks so generous to shareholders? Well,
thanks to the strong balance sheet of those cantonal banks and the comfortable capital base that they are enjoying, they are able to pay indeed a higher dividend than the average Swiss companies. This is mainly due to the long-term and the stable business model that those cantonal banks have, and this suits very well a long-term investor that is more looking for consistent revenue as opposed to short-term capital appreciation of its capital. So higher dividend is a good way for cantonal bank in a way to attract, keep and reward these loyal, long-standing shareholders.
side. And what about in terms of trying to tap that potential? What's the best way, strategy really of going about it?
Well, you can simply buy on the stock exchange since 13 of them are listed, so you can go and buy your stocks. I would just warn the investors that some of those companies are really in the small and mid-cap market segment. As such, the liquidity and the trading volume could be limited. So in order to enable investors to tap in this segment, in this quite interesting market segment, Banque Cantonale de Genève launched last month a certificate tracker which invests in the 13 listed cantonal banks. So the holder of this tracker is basically exposed to the performance of the basket, and at the same time he enjoys the return from the dividend yield. The basket or the certificate has been issued by BCGe, our sister bank from Canton de Vaud, and is actively managed by Banque Cantonale de Genève itself. It is managed using the operating income equity ratio, which in our view reflects the economical efficiency of companies. The basket is rebalanced twice a year, right after the result publication of each of the banks, so that the best performing, i.e. the most efficient banks from our ratio are always overweighted in the basket. You know, our investment philosophy is based on the conviction that over the time, the economical efficiency will be reflected in the share price of the company.
It certainly sounds like a decent and a beneficial philosophy. But just lastly, perhaps you can tell us a little bit about return in terms of shareholders, what you're looking at there.
Yep. So in terms of return, we have seen that with a lower risk than the global Swiss equity market, this segment is able to generate a higher return also than the conservative AA rated bonds. The current yield on the certificate is 3.5%, which is the average of all the dividend paid by those banks combined in the basket, and this compared to a Swiss government bond yield of 0.5% for 10-year holding.
Well, I mean, it sounds, you know, it's very interesting, very beneficial and fruitful strategy to adopt. Thank you so much, Laurent, for coming in and telling us all about it today. It's been a pleasure.
Most welcome. Thank you very much.
Thank you. Okay, well that's all from Laurent and myself for the moment, but there's much more to come here on Dukascopy TV, so please do click back for the hourly updates and exclusive interviews. Goodbye for now.